Rocco, our favorite rock. Rocco, 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 our favorite rock. Rocco, 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 our favorite rock.
Love that intro.
We are live. All right, gotta click two things. I guess I'll post the. Oh, that's StreamYard. I don't want to post that.
Yeah, I got you. Voila.
Although I did that, didn't I do that one? I did that once.
Yeah,
Nobody came on.
Yeah, it's been done before.
I haven't left the StreamYard up the whole time. Link. I mean, yeah. Ryan left the StreamYard up on Saturday. Did you see? It's some tweener, kick streamer came on. It was so weird. And they're like, "Have you ever watched this before?" And the kid's like, "Nah, bro. I'm ready to spice it up. It's just like, like what the hell's going on? So, I can just show it. Actually, I'll show it. I don't know if you were watching it. I was going in and out while I was watching the playoffs, but I gotta show this kid. I'm sure he's a nice guy, but so okay, there's no sound. Let me present. The first 5 minutes people should know are just waiting. Give people time because I don't do announcements. All right, where was it?
The Bunny Ranch.
Where was it?
Oh my God, that might have
been. It was me.
Oh, where'd they go? All right, that's enough.
Yeah, I would have. Vince McMahon returned it to BW.
This kid.
The chat.
Are you guys into politics? You guys do politics or no?
Wait, this
dude, and then I'll be like, I was hacked, guys. Meanwhile, I'm rich. Meanwhile, I'm on a cruise.
The talk to a method.
Exactly. I'm gonna go to bed for 3 months. Absolutely. Yo, who's this Michael Leinhart guy in the chat?
So he's like a Bitcoin streamer, and they were like, he had no idea who they were. He just showed up magically. I just thought it was hilarious. I mean, whatever. It's like how does the internet work? That if you're only in Bitcoin and you stream video games, how did you find your way to a live stream of a finance YouTuber? Cover stocks you have no interest in buying.
The algo works in strange and mysterious ways.
I will never understand it. Like, I'm just like, what was he looking for? Or did the algorithm just pop up and off you go? Maybe he was searching cash a lot. I don't know.
No idea. I mean, at the same time, though, they do have a healthy presence on Twitter.
Yeah, so, their Twitter game is strong.
Mm-hmm.
I gotta admit, I'll never be a Twitter person. Like, I can't. I just don't want to talk to people every day. So it's going to be kind of hard to. You have to tweet 20 times a day. I'm just like, I'll do 3 a week maybe if I'm lucky.
Yeah.
Our cat just loves that Muppet intro. Oh no. Does it make him jump?
Start meowing.
Hey, I think that's my best work. I made that. Mm-hmm. I took all the music and everything. That's me, 100%.
Yeah, I think it's great.
The B21 intro I used is actually a promotional video from Northrop Grumman.
Oh, really?
I just pulled the music and put different music on it. Yeah, that's a real professional video that they created. So, we got here Internet Warrior.
Yep.
I get video recommended with 20 viewers. Sometimes, I should just catalog when I get weird. I should just do a video on that. Just record 10 of these weird videos that YouTube just sends me in the algorithm. Because sometimes it's some weird shit. And I just wonder, what about me made you think I wanted to watch this? So I don't know. mysteries, right, of what you're. I don't know. YouTube has become noob friendly, but I don't know why he was even on there. I was like, if you're a Bitcoin bro, why are you looking for investing channels? You just buy Bitcoin. Like, why do you need to? What are you searching? Whatever. But before we start, we're just going to do some earnings. I figure this is such an earnings week, and I don't want to talk about tariffs again. So struggling for like anything else to talk about. So I guess go over some earnings, some big ones this week.
No, yeah, plenty of.
But before we start, Sasha just won't let this go. I love that Tom Nash just beats him over the head about the fact that he sold Palantir under $10. And Sasha, during the lockdown, go look at his old videos. I mean, he's just a doomer at this point. All he does is like doomer videos. But back then, he was a tech junkie investor. He was no different than Meet Kevin, basically. Just buying all the high beta friggin', tech shit that would go up forever until it didn't. But so that guy, the one pick that would have made sense for his strategy, it's just funny because like he is the guy that would buy Palantir, but he didn't. He sold it. So he gets mocked all the time. But and for good cause, because he is he's supposed to pick these companies. He's this type of investor. You're supposed to find the Palantirs, and you fucking sold it. But then he tries to now he's like all of a sudden he's like a value guy. He likes to talk shit like he's a value investor. Come on, bro. Okay, if you're gonna buy tech stocks like Sasha, fundamentals don't matter. It's not about fundamentals of these companies at first, right? You believe in the vision later on, but I mean there is something real to Palantir.
Oh yeah. It's not a company.
I've never said it's a garbage company. I've always said it's interesting. It's a very interesting company. Yeah, I did own it briefly once. So I think I traded it at like 24 to like 30 many years ago.
Yeah, it can and probably right now maybe looks optically expensive, but I hate do I want to short it? Hell no. Who wants to short this?
Some of these comments are right though. Like when people miss a stock that rips, right? They get defensive, and what do they instantly go to? They go, it's a bubble. It's a bubble. It's like, okay, is it really a bubble? Do you understand what a bubble means? There are fundamentals behind a company like Palantir. We could just debate the valuation's insane, but people are willing to pay that valuation because there's this there's all these potential futures, like the metaverse. Let's think of it like Marvel's metaverse shit. There's all these potential options in the future. A lot of those options and potential things that could happen are very positive to Palantir, right?
For sure.
There's the limit for this company right now. So that's why it's such a healthy valuation. Deals, it's making deals they've never made before with the government. They're cracking in different markets, healthy growth. So that's why it's so richly valued. Then people like him get all butthurt and now all of a sudden he's about fundamentals all of a sudden because he missed it. Now we're going to bitch about 100x price to sales after we sold it at under $10. That's what we're going to do. To me, value investors he's like now he's a value investor, which he never was before. He's just a big crybaby. So it's funny. People hitting him good. You're not salty. He keeps bringing it up, but I always like when Tom Nash brings it up, the videos. I always like them. What other comments? Analysts predict an annual compound growth rate of 51% for the next few years, 31% growth rate for revenue. I mean, if those happen, is it really that overpriced? I mean, maybe not. I mean, it turned out Tesla's 50% 10-year growth didn't quite work out for the Meet Kevins of the world that literally that's the video I wish I had saved from Kevin. I think Strongman has clips of it when he literally valued Tesla 50% growth for 10 years.
Oh yeah.
I mean, I'm pretty sure Strongman has a video of it before Kevin deleted it. But I mean, sky's the limit right now for Palantir. They could do that. Here's I don't know if he deleted it or not. There's the video, but let's watch the beginning of it. I have the whole video saved in case he deletes it. Let me pull it up. Let's see. Oh, I got Chrome tab. Nope, that's not it. Entire screen. Okay.
Hey guys, it's Sasha. 3 days ago, I made a video about Palantir's Q2 results, and that earnings call was right up there with the worst I have ever listened to. I mentioned in that video that I'm going to do some math.
For context, people, this is like what, 2 or 3 years ago. For context, so it's not now.
Will be selling my Palantir position, and the very next day, I did exactly that. I have now sold out of Palantir in every single one of my portfolios, and I am now an ex-shareholder of Palantir. And I know there are going to be a whole load of Palantir fanboys out there in the comments below thanking me for selling them shares at a discount, maybe in somewhat more colorful language. There'll be plenty of insults thrown and me being told that I just don't get it. Please feel free to peruse the comments for the best backholder reactions and do.
Look at how smug he is. Do you feel how smug he is? I just something about Sasha. It's like the arrogance. He always is like, I'm so much smarter than you, but he's never been able to prove it. I mean, he buys these crazy tech companies that go up and down. He's got no returns unless he puts them behind a paywall. But he's never. I have seen nothing about him that lets him be this arrogant about investing. I can't stand him, but. He comes on Strongman streams every once in a while, though. I would love him to come in Strongman's Discord. Like, I would rip him. Oh, can't stand this guy.
Your worst against each other, but in this video.
So, anyways, there it is. So, I think we can stop screwing around now. So, anyway, well, I think he's a terrible YouTuber. Someone want to disagree with me? I'm not in his pay. I don't know what you would look at him. He's kind of like Meet Kevin, though. Like his videos, he gives the appearance of that he knows what he's talking about. Like I think, he types down his what he's going to say on his streams. He records it. Writes a transcript or whatever when he talks. I mean, he sounds the part, I guess. He has a British accent. Maybe people think that makes him smarter. I think he's trash. Trashkin. But it's okay. Let's see who else is here. We have Howl. Rocco is my favorite rock. That's for sure. Tractor Supply is hurting. You buying more? I haven't looked last month or so. Tractor Supply is probably going to get a little bit of pain from tariffs, as will everybody. I sold Palantir at 8. Oh no. Why? I'm just curious. So what made you sell it? I mean, I give those people credit, man. If you bought it, because it was nothing but pain. If you bought it below $10 for 2 years, and then it finally did something. But the true believers did very well. You say too late to start. Got your heart in a headlock. I don't believe you say no. I'm confused. Are this like music lyrics? I think that got screwed up. If you sold Palantir at $8 due to Strongman, please contact. Okay, that's funny. That's kind of funny. Okay. Oh, look who's here. The Oracle.
Hey.
Hello, Mr. Oracle. I'm glad. Well, our entertainment's back, Khmer. Although, did you see he joined the accounts now?
No,
So
did
he took his wife's account and merged it with his account because he'd lost so much money. He was bleeding capital, so he's still bleeding capital, but he thinks he's all high and mighty right now because he merged the accounts. He got more margin from Schwab. Bitcoin's doing okay, so he's a little high and mighty. So what's he doing? When things go green, he starts buying again. So typical Khmer. He doesn't buy when it's red, he buys when it's green. Anyways, what we got here? I've been selling Palantir into the pump. Too much hype into earnings. It's in the hell of a run. The pains in this. Yeah. I mean, what they're accomplishing is incredible. because we've talked in the past, like how many companies are actually like cash flowing AI, right? A lot of them is just CapEx spend right now. We're in the early parts of the game where they're just spending as much as they can on it, but they're not producing. It's kind of rare for a company to actually be producing cash flows from AI, not just like packaging it with some other product they already had, but like Palantir is a raw form of it. You could argue Meta is a form of AI, revenue generation at this point. So it's tough. Right? Okay. So we could talk about. Oh no, yeah, Schwab. I've been a Schwab. Schwab don't play with games. Like, if he starts screwing around like trading, and they'll pull your margin, man. They don't give a shit. But they have to look out for you. That's what the brokerages have to, like, if they see something concerning about your activity, they are required to, like, they'll send you a letter. I've seen on Reddit people post it. They'll send you a letter being like, hey, we've noticed certain things you do are concerning to us. And then they can restrict your activities because they have to watch. They don't want to get like sued. So we're gonna cover some boring ass stocks because that's what I do. But should I show? I mean, the returns are not boring. I find HVAC very interesting. So I don't know. I mean, if you lived under a rock, I own many HVAC companies. I have for a few years. Carrier, one of my favorites. Carrier, I didn't even realize it ripped until after work. I was busy today. So we can rip through some stuff. I know you don't have Carrier.
No, I do not, but
that's fine. Okay. So sales, they look boring. They don't look like they're that high. Well, their North American growth, very impressive. Their European business struggle, but we'll show Tran, the European businesses are struggling, numerous companies. So Europe is in like a build out phase for HVAC. They're still developing that business because like Europeans never needed air conditioners till global warming hit. So now like these businesses are being built that didn't have all this extensive HVAC infrastructure, not like North America. So Carrier's earnings, I thought were incredible. I just thought their free cash flow generation, also, they raised guidance, even with tariffs, right? So even with tariff concerns, they raised guidance. What slide I want to show? Yeah, so 9% growth in North America. They changed how they, I liked how they changed how they reported their segments. When I first bought Carrier, I think I'd mentioned they had other businesses. It wasn't just an HVAC company. They had like a fire safety business and some other. They had all these little tiny weird things you just collect over a long time as a company in the industrial space. So CEO comes in and he starts just selling all of it. So the CEO sold all this nonsense, and then we're now a pure HVAC company. Heat pumps, electrification, like this, they are right in the middle of this. So what I'll show, this is the reporting. So margins, you can see, I mean, margins up 50, 100 basis points, 250 basis points in this climate. Great job.
Oh yeah, got it.
Their guidance is up. They're talking about accelerating growth going forward as they've done some of their build outs already. Their free cash flow, they kind of dropped some of their CapEx spending and just more profitability. So their operating cash flow is much higher. Where was it? We're going to go through a lot. I got to remember where everything is. Zoom in. You can see operating profit, much better. Okay. Very pleased. So I'll play. Just, I guess for context, maybe people don't know. So I've owned this since Jesus. It was like 25, 35. Yeah, it was like $30 when I was buying it, which I think was 22. But I saw the potential with the new CEO spinning off companies and focusing on heat pump systems. this was before they bought the European business, which I didn't even expect that, but I was really a big fan of that. I thought expansion into Europe made a lot of sense for them because there's a lot of business in Europe that never had to be there before in this space. And also the continued electrification of HVAC systems in general, that's not slowing down, even with Trump pulling back some EPA or some of the guidelines and bringing coal back or whatever. Okay, let me pull this. I have to flip between different screens. Okay. I'll play like the first 2 minutes. Nope, this isn't the right one. This is a high production, nothing but the highest quality in this stream, huh? Okay, I got the right one now.
Well, Dan's pulling that up. Please consider liking and subscribing.
Okay, that's the right one. We'll go back to the beginning. Damn. Can you hear it? Oh.
I do.
morning.
Wait, there it is. There it
Here's
is.
your first quarter 2025 earnings conference call. I would like to introduce your host for today's conference, Michael Redner, Vice President of Investor Relations. Please go ahead.
Good morning and welcome to Carrier's first quarter 2025 earnings conference call. On the call with me today are David Gitlin, Chairman and Chief Executive Officer, and Patrick Goris, Chief Financial Officer. Except where otherwise noted, the company will speak to results from continuing operations, excluding restructuring costs, amortization of acquired intangibles, and certain significant non-recurring items such as acquisition and divestiture-related costs. A reconciliation of these and other non-GAAP financial measures can be found in the appendix.
Yeah.
We also remind listeners that the presentation contains forward-looking statements which are subject to risks and uncertainties.
I can't
Carrier's
fast
SEC
forward.
filings, including our Form 10-K and quarterly reports on Form 10-Q, provide details on important factors that could cause actual results to differ materially. One additional note, as you probably saw in both the press release and webcast presentation this morning, we announced our revised reportable segments and segment profitability measures, so we will be speaking to financials on this basis going forward. With that, I'd like to turn the call over to Dave.
Thanks, Mike, and good morning, everyone. Let me start by thanking our 50,000 teammates for delivering another strong quarter. I'd also like to welcome Michael Gerges to our team. He is leading our Climate Solutions segment in the Asia Pacific, Middle East, and Africa region, and we are thrilled to have him on board. So, a strong and better than expected start to the year. Orders were up high single digits with double-digit orders growth in Climate Solutions Europe and Transportation. Within Climate Solutions America, sales in both residential and commercial were up about 20% each, more than offsetting weakness in light commercial. Global aftermarket remains on track for another year of double-digit growth following 1Q up 8%. Total company backlog was up about 10% year over year and 15% sequentially. The team continues.
That's impressive. That means that what that means to me, orders are still coming in.
Yeah.
Even with tariff, they're still getting orders coming in the books. Good start to the year.
To use Carrier excellence to drive strong productivity with core earnings conversion of about 100% and 210 basis points of margin expansion. We drove 27% adjusted EPS growth on 2% organic growth. Free cash flow was $420 million, and we returned about $1.5 billion to.
They basically didn't have free cash flow last year. To give context, so this free cash flow number, I think it was like $4 million. Wow. So they finished some projects basically. They got some very healthy free cash flow now. They can pay debt. They were doing share buybacks. They're doing everything. Yeah. This is like what a well-oiled machine looks like, with a company.
Quarter through dividends and share repurchases, plus paid down $1.2 billion in debt with no additional maturities until 2027. Turning to slide 4. We made great progress.
So here's what it's about. Aftermarket global commercial HVAC was up 10%. So for all you tech investors, this is a good growth rate for a company that doesn't make software. Just so companies that make real things. All right. This is good. Very healthy margins. Margins are up, paying debt down, share buybacks, expansion plans that are pretty aggressive. They've sold off and spun off all the stuff they needed to. So very exciting. I think if Europe, where carriers really gonna, they have like a lot of European plans for expansion, which so healthy Europe give me help, so I get exposure to Europe kind of through carrier. Actually, if Europe starts to prosper, so should carrier. So happy with this. Tariff talk. All right, here we go. Tariffs. With respect to tariffs, virtually all our imports from Mexico are US MACA compliant for people. That means if I'm getting this right, I might be screwing this up, someone correct me. If the products are origined from Canada or Mexico and not just assembled there, they don't have to pay the tariffs. I think that's what, I was reading up on it. This might change tomorrow, obviously, based on Trump. But so what this is, a lot of their imports are raw materials. So they build most of their productions in the US. I think they have one production facility or two in Mexico. At least I think it's one. But a lot of this is United States. So obviously raw materials they can get because they're origined from Mexico and Canada. So I knew this before I told you guys. They're not impacted so much by tariffs, carrier. So that was next on my buy list, man. When we were buying stuff during the Liberation Day bloodbath, this was the next on my list too. Oh man, I should have bought more at 55.
Still got myself some Aeon.
Yeah. So
it's there.
Yeah, Aeon didn't do earnings this week. We've
not
talked
yet.
before.
Yeah.
So okay, we've spent a lot on carrier.
Yeah.
No one here is going to buy this company. It's all right though, because this is my channel. I can talk whatever I want. We can buzz through Tran. I'll buzz through this because no one cares. I know you all want to talk about Amazon and you all want to talk about Meta and blah blah blah. Okay. So this though, Tran is like the cream of the crop. I mean, obviously I wish I bought more Tran than carrier because Tran's like tripled, carrier's doubled. But this company, man, this is like, they are a juggernaut, fucking juggernaut. Like their backlog, like carrier's backlog, like is up to $1 billion, maybe. Like Tran's backlog is like, goes up $1 billion a freaking quarter. But these are the guys for transportation-based cooling system, like truck refrigeration and trains. Like this is the company that does all that. They're very, very good at what they do. But you can see like their organic growth. So they're 11%. They're also, so we're in the same space as carrier. So we're just looking at trends right now, So trending, all these HVAC companies are trending about the same, actually. Increasing revenue, increasing margins, both struggling right now in Europe. So that's where you can say, oh man, trash company, they're not doing well in Europe. It's like, okay, well, other HVAC companies are also not doing well in Europe right now. Other than that, like, it's not much. Like, this is just a rock star company. They make essential equipment for the world to run. Refrigeration for like your McDonald's, the freezer in the back of a McDonald's. Like, this is the company that does stuff you never see, but it touches you every day, basically. So yeah, the margin expansion, very impressive, right? This is crazy. Like these margin.
Oh yeah,
look at that. That's beautiful. But you can see too, like I said, they're just like carrier. Margin troubles in Europe, which is okay. We can dive into that. I can dive into that later on. See exactly what's going on. I think it's more the expanding into that territory.
And even then, like that's not the worst. Like you have when it goes so far as to say margins were crushed.
Yeah. And again, they're not so affected by tariffs as we just sort of same idea as carrier. They're not really that impacted so much by the tariff issue. So I don't know what else I want to talk about. Their call is boring. Tran's call is boring as hell, even for me. Like they're just it's a bunch of old freaking boomers run the companies. Let's see, 20% growth. Yeah, they had really good backlog. They talked about in the call their demand for their products is still high. They said there's a few areas where people have delayed orders, but they said overall trends are still orders are coming in. So happy organic revenue. So you see guidance, we're still guiding higher,
Positive, higher growth.
positive,
Yeah.
which is great. I am happy. Yeah. All right. So there's that. Should you buy Tran? I don't know. It's very richly valued. Here again, talking about rich valuations, since Sasha wanted to clown, like this company deserves a rich valuation. So if you look at this compared to Carrier, this is a superior company. They have better growth, better margins. They have a stronger position in the industry. Yeah, so it deserves it. If someone's like, oh, I'll wait till it drops. So Carrier's valued at 17 PE, and I'll wait till Tran gets 7. It's like, if Tran got to 17 PE, they made a terrible mistake, like something really bad. All right, that's all I wanted to say. I am happy. HVAC is beating the S&P. I think it's beating QQQ also. If I actually took all my HVAC companies, I'm pretty sure they're beating everything right now. So,
From what perspective? Like what time frame are we talking?
just year to date. Well, actually,
wow.
1 year. I think 1 year you could even.
Okay. Yeah, that's
well. Let's see. Fuck it. I can.
Impressive. That is impressive.
Aeon's had quite the resurgence.
Oh yeah, yeah. I've been
Which
enjoying it.
I kind of expected it. I mean, everything told you that they would be like their drop was not like something unforeseen. People say, "Oh, markets are efficient." I'm like, everyone knew they were going to change refrigerants and shut down for like a month and a half, but the stock got punished. It's like it's just funny to me. I don't necessarily believe in market efficiencies. So what we got year to date? Okay, yeah. Aeon started off strong, but it's starting to recover.
Yep.
So we're doing all right. Let's do 1 month liberation movement. Not bad. Not bad.
That's my entry, roughly around there.
Aeon?
Yeah.
Dude, anybody I was telling people, I'm like, when Aeon got to 70, I'm like, that was always like my buy. I bought a little more. But when they dropped there and then I understood the refrigerant switch over, their business was still intact, little struggles this year. It's recovering faster than I even thought. But the technologies these companies have, like these are real moats, some of these companies. And I hate when people throw the word moat around so much online. And it's like they're talking about like a fucking software company as it's just ridiculous. Sometimes I hear this stuff and just like, there's not as many, not every industry has moats. Moats are not everywhere. Like, I think that term gets used way too much online. But like not everything company do maybe is a moat, maybe certain parts of their business.
I don't know. And
oh my God, SoFi. Here we go. All right. So you wanted to do Airbnb?
We can if you want. I didn't come fully prepared on Airbnb.
I mean, you can't be fully prepared if you're going to go through like 5 or 7 earnings.
Yeah,
There's no fucking way. I'd have to do a 30-minute video on each one. These are just companies that own or interested in. Okay. Builder. Oh wait, I did pull it, didn't I? Yep. Or we'll do Builder for. I already have it pulled up. So, I mean, unsurprising to anyone. I should say I had Builders at like 120. It went up to 130. Trump came out with the first run of tariffs on Canada and Mexico. I'm like, bam. I'm like, I'm out. I'm like, there's no friggin' way this company's going to do well with that uncertainty for now. So now it's down to what, 110, 111.
Yep.
I'm not surprised. I mean, you've got the everyone thought mortgage rates would start going down, right? Now bonds are going all over the place with what Trump's doing with tariffs. Housing's in a state of, you just don't know anymore. Like, I don't know if I want to expand my investments in housing at this point. It's just, there's so much uncertainty. What if we go into a recession? What if rates on mortgages don't go down? What if the costs get out of hand, right? because a lot of the stuff involved building a house is going to be tariffed now, like the fixtures and the lights. Maybe not the lumber, but maybe. We're not sure. Windows. So not a good quarter for them. Missed. Let's go to their... I haven't looked at their presentation. Oh, yeah, I'm not surprised. I mean, this is kind of expected. Oof. 43% decrease in earnings per share. Oh my God. Man. I guess at one point you could ask, though, how much worse could it get for them? Is this the buying opportunity, right? Because if housing starts recovering, this is like the tip of the spear when housing actually ever recovers. It's this company. Holy shit. This is really bad. Okay. They are still buying back a lot of shares, though. Core value add organic sales decreased 12%. Sheet goods decrease. Oh my, everything's down. What do you think? Have you ever bought this?
Not me, no. No, it's a space where I don't think I know enough to be fully comfortable with, and yeah, like maybe a little bit more clarity would be useful.
The only thing now, too, Home Depot has started moving into the building supply space. They already made a purchase, and now Lowe's is going to make a purchase into the building supply space. So, like, they've got some competition now. Builders for source. So the big box stores are going to get into the space of the building supply. Let's see, guidance. Okay, current guidance. Okay, they went down. Okay. Jesus Christ. Man, I don't know. Like if you've got some freaking ability to take some pain. Oh. But you'd have to look at their price. You'd have to value like that the whole year. They might have decreased sales all year. This whole year could be a disaster. Is the share buybacks enough to make you convinced to hold on? Okay. I'm gonna see what they say about tariffs.
Hey, like it's definitely not a bad company in its space.
No.
It's just
Okay,
like,
I saved this part.
Yep.
Imports account for 15% of our total raw material spend in 2024, comprised of roughly 100% commodities. Okay. Estimated tariff impact. Okay. 175, 250 million. Plus price suppliers, this range is tariff exempt lumber. Okay. Increase 50 million. Man, you're right in the. This is so uncertain. Like, you've got tariff issues, you've got interest rate issues, you've got housing issues. Like, there's all these things that have to fall in place for this to be a good investment.
Yeah,
but we're gonna blink and it's $200 again. This
company, yeah, like it's one of those where like you tell me that happens, I would be like, yeah, I wouldn't be that surprised.
Like, no, this thing trades like a freaking like crazy, man. In the past.
Oh, for sure.
All right, so. Yep. So we will see. I would rather invest in HVAC companies than that for now. All right, there's that one gone.
Quite understandable.
All right, let's do Airbnb. I suppose that'd be good because I was like, we should do travel. So either Royal Caribbean or Airbnb.
Yeah, the point of curiosity for me is Booking also.
Did they report?
I don't think so. But
no, they already did, right? Like a week ago.
Yeah, that's what I want to say. But where's the different spot in the travel chain?
I know airlines already are saying they're going to reduce flights.
Yeah.
Less travelers. A lot of reduction in European travel. Do they not have a presentation?
They have like an investor or a shareholder letter. Like that's the only thing that I saw.
That's it?
Yeah.
Oh, okay. This
Like
looks
so
great.
it's like a PDF that like has moments where it looks like a slideshow and then like a whole bunch of your usual stuff. Like
I've never really thought about buying this company, I'll be honest.
yeah.
I think it's kind of interesting though.
Oh, for sure. Yeah, like it's definitely not a crap burger that's going to
No.
zero. Yeah.
I mean, just because like
yeah.
I love the product. Like
Mhm.
I really like Airbnb. I think it's a great product. So
Yeah.
Peter Lynch intensifies, but it's hard to wrap your brain around it because it doesn't own it. It's just like a network. Like they don't actually own anything. They're just like the glue that holds together this big network of people that want to let you stay at their house.
Mhm.
But like it's a great product.
Oh yeah.
I've never really deep dived it. It's an interesting company.
Oh, for sure.
Yeah.
It is one though where it's not just US focused, which is something that, like originally I had that previously like held misconception.
Yeah.
Like they noted for example Easter performance in Latin America is quite strong or was quite strong.
Oh no. Poor Warren Buffett. Saw on the carrier.
Yeah.
Okay. Free cash flow 1.8. Gross bookings. That's what I wanted. 7%.
Yeah.
Okay. Revenue 6% over year. It's kind of like PayPal type increasing.
Yeah. Yeah, it's one where the coolest growth percentages are, at least for now, behind them. Maybe that's just temporary.
It's pretty mature at this point.
Yeah. Because their outlook.
Okay. Share repurchase.
Yeah, like by itself, the outlook isn't horrendous. It's just that maybe people expected more, or the current share base or shareholders demanded more.
How much cash they got? Wow.
Yeah, yeah.
It's like $11 billion of cash.
Mhm.
Okay.
Yeah. A little over half the current current assets.
Long term. What? Is that true? No long term debt?
Yeah, like the last few times where I've glanced at them, like I never harumphed over their long-term debt profile.
Maybe it's not. I wonder if stock analysis isn't totally updated yet. It's not always accurate the first week after it gets new reports. Because I don't see anything long term debt repaid. Okay, well, that's what you get for a free service.
Yeah.
I'll check after this. I have.
Yeah, aggregators can and do screw up.
The problem, my paid stock tool, it looks terrible on screen. Like the numbers are so close together, I can't like this is like really easy to show. It's just spaced out really nice.
No, they still have long-term debt.
Yeah, I figured that doesn't look great.
Mm.
I don't know. So okay, so this is like a very mature company at this point. We've got single-digit growth, slight increasing margins. It's not insanely profitable. I don't believe. Yeah, I mean, this is like PayPal, isn't it? It screams PayPal. Like, it's just a mature business. Where do you go from here, other than like, don't tell me AI coupon receipts or whatever. Like, and now you're taking risks of like cyclical travel. People back off travel when they get scared, or other reasons. Yeah. Okay.
Oh no! Wait! No, I stand incorrect. According to the to their most recent 10Q. That just
They did pay it?
Yeah, it's not there anymore.
Okay. So
Yeah.
this is like a share buyback story at this point.
Yeah, seems like it.
I mean, if you're doing 6% growth,
Mhm.
so they need to be doing share buyback. They have the cash to do it.
Oh yeah.
I mean, if I was going to buy this, I'd have to see what are they doing with that cash pile? Are they do they have expansion plans?
They did mention a little bit of expansion plans, like
Okay.
that they still had plans to like commit some money into some business line or other, but it's not like they're swinging like crazy amounts of money where it's like, oh, you're swinging for the fences here.
So I know, weren't they going to do like some sort of agent, like a travel AI agent
That's what I
feature?
thought I heard.
I know I heard that from the CEO. They were going to have some sort of AI agent, which they're all doing this,
Mhm.
where it can book your whole traveling plans, I guess.
Yeah.
I'm like, okay, but like all these big companies are doing it. It's in like Jensen Huang's AI curve.
Mhm.
AI agents is in the curve, and all the companies are working towards that right now.
Yeah.
That's not exciting. Yeah, how do they? I don't know what's exciting about this. This is like when someone asked about PayPal last week. It's like, I don't know what's so exciting about companies
Mhm.
like that. Okay. I don't have anything else to say about. I'd have to see like, okay, what are they gonna do with that cash? Like $11 billion?
Mhm.
Why are they holding $11 billion? Do they have CapEx plans for some sort of AI project, or are they going to do more aggressive share buybacks? Or are they just saving cash for a possible recession, travel going down?
Yeah.
Okay. I don't hate. I think it's kind
It's
of
not.
interesting. I
Yeah,
mean, how's the
yeah,
stock
it's not bad. Definitely not bad.
Yeah, I'm not surprised.
Mhm.
Okay. Like
One for the radar.
this is what you get with a company like this. It just goes up and down, up and down.
Mhm.
Okay. So we've done any others we want to do?
Did you want to entertain SoFi? I only do have like one little tidbit on SoFi.
Let me look at the calendar. What do people want?
Opening it up to the public.
ADP. I know ADP reported kind of concerning employment numbers. So ADP, is ADP really even like financial? It's more like it's funny because it's a company, but it also is an economic indicator at the same time because they have so many people on the payroll.
Yeah.
I used to have ADP, but I had a lot of it. I might have a little bit left at this point. Okay, I'm looking at the earnings calendar. I mean, Etsy is a pretty goated company, right?
For those that don't know, that's a bit of an inside joke, slight inside joke.
SoFi.
There's history on that one.
All right, we can pull SoFi.
Like I only have one tidbit, and that's.
I mean, I don't really want to look at MasterCard. I don't really care.
Yeah, and I've already glanced at Visa.
There's not there's like really nothing to look about with MasterCard and Visa. You just look at like volume of fucking transactions. That's it. I can go look at transaction volume.
Yeah, they're like, at least Visa's commentary on forward outlook was too early to say, a little uncertain, but they'll plod along their Visa. But yeah, SoFi. The interesting development that I heard was the not as good bank side. Apparently, they've partnered up with Blue Owl, and that risk management is where Blue Owl takes some or a hefty chunk of that risk.
I did hear about that.
Yeah. So like if you were looking to short Blue Owl, or not Blue Owl, short SoFi because it's just a poopy bank, or this is legit fintech with crappy bank. I would think that that's the thesis breaker. So like I don't have a dog in this.
I did read about so Blue Owl's going to fund that, or they're going to get the loans and then they'll collect a fee with Blue Owl's capital. which is the ideal situation for these loan companies. So you prove to the industry that your originations process is somehow better than other people. So I had said in the past, I'm like, I wanted to see them. I haven't done a SoFi video in a long time, but like, I know I'd said like, well, how do they become a better company? Because I thought they were trash. If they expanded away from personal loans, which they have actually, their other businesses are growing. So it's okay. I just think it's a boring ass bank. It's not a trash company anymore, but it's still just, I don't think it's that interesting of a company. It's the same problem. Like this members number, like these aren't active members. They just like members. Last time I looked, they're just people that have accounts that you don't know how many of these are active. They count products in a weird way, I think, because they count you could have like 8 products, right? You're one customer though. So, but then they'll show that you're like worth a bunch of different product lines. So I never liked how they did reporting. I think there are some weird things about their reporting. So you're wrong, Dan. I'm like, well, it's not beating the S&P. So what do you mean I'm wrong? Like this company is not beating the S&P 500 since it went public.
Yeah.
So I don't know who you're telling is wrong. I have HVAC companies that have doubled and tripled. So cool.
Yeah,
you have a bank. It's a boring ass fucking bank. Like to me, if I'm going to invest in a bank, like I'm probably going to invest in Nubank, which I almost did. Man, I was close when it got to $10 because I talked to Dex about it. That's an interesting bank because there's this potential for rapid growth.
That guy made out like a bandit on that one.
And there's Dave. I think Dave's way more interesting than SoFi. And then the other one is like if we went into a deep recession, I would look at Goldman Sachs because it would probably get clobbered. And that would be the time to buy Goldman Sachs. So I don't know.
Speaking of Dex, there he is.
Is he here?
Yeah, he is.
Dex, I failed you. It got down to like $9. I didn't buy it. I was looking at some other stuff. God, I'm mad about that. So I mean, I just think
did well.
It's just fine. It's a bank. They have some interesting growth. I've like their brokerage software sucks. I've used it. I opened an account just to mess with it. Like their brokerage services suck. I didn't like it at all. And I still have like this company has not survived a recession.
No, that is
since they're a public company. They've not like we don't know if their personal loan book will survive what if we get to like a 6% unemployment rate?
Yeah.
Like I don't know. This is not something I care to put my money to.
It's one though where like if someone were to be very bullish this company, I would caution them just to, like you mentioned, Dave. There are other fintech companies also that are quite, respectable and have plenty of hardworking, smart people as well. So it's time will tell. Time will tell.
So you can see here, like, I mean, they're getting better growth out of home loans than the last time I looked at them. Seems to be doing well, actually. The home loans business. That's good. I wanted to see them diversify away from personal loans.
Yeah.
I don't know if they have credit cards on here.
I forget if they do, but
I mean, it's just fine. I don't know why they're so excited about this company. Okay, technology accounts.
I think it might be the tech part of it.
Okay, so this is plateaued. And that was the other part I was complaining about when I looked at it 2 years ago now. The technology business was not growing. The Galileo business.
Oh, yeah.
They paid so much money to acquire. It was growing revenue like crazy, but the actual operating cash flow was like nothing, which told me I think they were just like giving the product away to get it out there. So they must have been offering discounts or something because they weren't making money. It was weird to look at because the revenue kept going up, but not the contributions to profit. I think is what they called it.
Were you trying to share what you're seeing on your screen or no?
Oh,
Yeah. Sorry, people.
it wasn't showing. Oh my
No, it
god,
wasn't. Failed you. I failed you.
I thought it was showing. I was looking
Yeah.
at it. I wasn't looking at the screen.
No,
Oh,
that's
I'm
all good.
sorry.
Yeah.
Okay.
Yep.
Damn it.
Yeah.
So we can go back
So
top.
for whatever it's worth for people, I don't feel like going bearish on this company
Yeah.
anytime
So
soon.
here's the Blue Owl.
Yep.
Geez, I thought I was showing this the whole time.
Mhm.
I have two screens. I was looking at the presentation. Accelerated loan originations. They still say that they're a high quality customer company.
Mhm.
I don't know, man. I don't believe that narrative. I don't necessarily believe it. The other thing is like this is like a beginner bank. Like if you do better in life, and they'll go, no, man, I'll stick with them. Oh, the environment. I'm like, there are much better banks that will take better care of you if you actually become a person that has assets. Like, okay, you start out with Robinhood or SoFi, you're going to get to a point where you want full service. Like you want like a preferred customer service number, let's say, where you call and someone picks up right away. You can get to a person, physical bank that you can go to sign for things, and there's other preferential treatments you can get from the right banks. I just find it hard to believe they're going to get to a point where these customers will not just keep growing with them. I think they'll move on to something that's got better services and better options. And I still don't think people care about one bank that does everything you want. I don't think people care. I think people are fully okay with like using 4 or 5 different banks for different reasons.
Oh yeah.
Like I have a bank in this area that has really good credit cards. Then there's a credit union I'm at that has really good home equity and car loans. And USAA has a different purpose. Like,
Mhm.
so I don't mind having like 4 different financial institute.
Oh, yeah.
I think most people don't care either. Like, are you going to not get a credit card that has 4% points back just because it's not in the bank you're using? Like, you'll go get the card.
Yeah.
No, they missed my whole run down this thing.
It's fine. It's there for the public.
It's fee-based mix. I mean, okay, for people, I just think it's fine.
Yep.
I mean, this is like a meme stock, so anything might potentially make it rip. So, yeah, non-interest generated. Okay. I would have to go look too. I don't want to do it now. The allowance for doubtful accounts. Kind of
Yeah.
curious what that. I haven't looked at it in like 2 years. That'd be interesting to look at. If I was gonna, I don't want to buy this. I don't want to look. So, okay, so to make a long story short, they're diversifying away from personal loans. Looks
Yep.
fine.
Mhm.
They say they're for high quality people. I mean, we'll put that to the test if we go into a recession. We'll see how high quality those loans are. The
Yeah.
Blue Owl thing is interesting.
Mhm.
Yeah, I think there's better banks to invest in though. All right. Any other? What else should we do? So if I will buy all the Hooters buildings and bank out of them. I find it hard to believe they're only for high-end customer. I mean, I can get a SoFi loan offer in 5 minutes. I don't know. Just the power of AI. Okay. Yeah. Like if you're going to look at SoFi to invest in them, I would need to look under the hood. How profitable is the technology platform? Don't worry about revenue. Look how much of is it actually contributing profits at this point, which it should, because they've been doing it for a few years now. Allowance for doubtful accounts. Make sure that they actually are diversifying away from personal loans. I don't really think the account members number really is that big important. Maybe some people put more importance on that. I don't really. Yeah, it's okay. Any others? What else is out there? We're at an hour.
Did we want to talk about meta?
Everything money's teaching options to retirees. Oh
Oh
no.
no, please no.
I pretty much gave up on my wheel strategy. So I don't even know if I want to do video. It got so clobbered.
Mhm.
It's just like pointless. Like
Yeah.
I've already the experiment's like over. It's lost so much goddamn money at this point. Like
It's a
dude,
great thing it was a paper account.
it's lost like $40,000. And I tried to do it in a responsible way and it just got clobbered. So I'm just like it shows like this option trading garbage that people think is it's free money, man. It's like, no, it's not. You
Mhm.
take a lot more risk than you think when you're trading options.
Oh yeah.
When you're selling them, even
Mhm.
more. Like TJ the Wheel, man, he lost like $3 million around Liberation Day. So I'm sure he's got some of it back because he stayed in, but I'm just looking at the company list. Yeah. Caterpillar, Spotify. Do you want to look at Spotify?
I mean, if you really wanted to, I'll go. I'll come along for the ride. But to me, it's weird that like it's held its own. Like I don't think it should be punished because of tariffs. That'd be silly. Uh, but at the same time, like it's the business model of the music industry in Spotify compared to like movies and Netflix. It's not the same, and I'm wondering if Spotify will ever get hit. But just with the ebbs and flow of how those businesses work. But again, I don't know.
Okay. Now, make sure I show it. Yay. I can't believe this now.
Mhm.
I bought this at like $70.
Yep.
And I was so goddamn proud I sold it at 100. My God. Now
Yeah.
it's
Where it is.
$600. I don't know. Okay, let's monthly active users. Okay, still growing.
Which is impressive. Like
Favorite
I think everybody
subscribers?
knows about Spotify.
Okay. Total revenue. They must have guided because I know they got clipped on earnings. Margins. Okay. Subscribers. Interesting.
Mhm.
Guide. Okay. I mean, looked like a decent quarter. Advertising. Oh,
Yeah, that could be it.
there we go. Not great.
Yeah.
I mean, I don't know. It's just probably very richly valued. What's it trading at? What's the PE?
That is a good question.
Okay.
Spotify stock. I
Premium
see trailing 12 months of silliness, but 96.7 PE.
Okay.
But that's trailing though, like for this.
That tells you a lot.
But yeah, like optically smell test wise, yeah, like
I mean, it's still growing like
Mhm.
a lot of the like 12%.
Yeah.
But the members numbers was in guide. Okay. I don't know. What always concerned me about this is just like I thought they have to pay the artists. You can't scale that, I don't think.
Yeah.
Every time you play the song, you pay them. So it's not like your costs go down if you have more subscribers. Unless you could say that more subscribers allows them to negotiate better deals with the artists, because you can say, hey, instead of 1 million people listening to your song, now it's like 5 million people. So can you take less? We're going to give you less per song, but it's still more money to you. So then it makes sense, because then it's like, okay, now they're actually scaling if that's what they're doing.
Yeah, I want to say they also like changed up their policy with like exclusivity deals. Like I know he's one big example, but like I don't think Rogan's exclusive anymore with them.
No. Oh,
so
wait.
like, you know, that maybe changes some things. Oh, someone.
Hello, gentlemen.
Fabio, what is that? What is that?
Who is that terrible looking?
What
This
is that?
This is a very important businessman in the world. He's Brad Jacobs.
Wait, is that the
QX?
QX?
I hate. Yes, that is. I hate you, Fabio. Did you seriously come here just to do that to me?
No,
Because I have to explain the inside joke now.
Well, okay. Well, now you have to.
I hate you so much. Okay, so in the Capital Mindset Discord, someone like was like, "Oh yeah, Bacon. He's an all right guy when it comes to information," and he misspelled bacon as beacon. So the running joke has been, "Oh, Brad Jacobs QXO is trying to buy Beacon roofing supplies or what have you," and it just stuck. Oh, Beacon, Beacon memes. Hey, there's Beacon. So,
Well, but it's actually me, Brad Jacobs.
no, it's not.
I just can't get my head around.
I'm just like not present. I just gym attire. So
yeah. Welcome.
You missed all the hot carrier talk. Sorry.
Oh yeah, what happened to carrier? It went up 11%, right?
Yeah. Aeon went up in sympathy, so I got to enjoy the wave.
Their free cash flow exploded, carriers, and then their backlog's up, so they're guiding up even with tariffs. I was happy.
Tran also had a very similar story.
Tran run a train.
Yeah. So, you know, thankfully, healthy amount of ideas. All I just need to do is allocate and manage.
Like, what do you say about Spotify though? It just flew away, and you're never going to get a chance to buy this company. I just don't. What's 100 PE? It's like, Jesus Christ.
It's fair value.
I wouldn't say never, like, because.
But you're not getting like a 20. You're not getting like Paul level PEs with this.
No.
That's like, okay, what is the discount? I mean, it's not a real product, so tariff risk isn't there.
Yeah. Well, what was the thing that like buckled Amazon last time, Fabio, when you were able to like swing for it? Or not Amazon, Netflix. Sorry.
Oh, there was like all this concern about competition coming in and just stealing their lunch. They had for the first time in ever a declining amount of users, but that was because they nuked Russia, not like literally for the algorithm, but they eliminated Russia as a region, and then if you broke out those numbers, which you think markets are perfectly efficient, they would notice that and it would account for that, because if you did exclude Russia, they grew, but if you included Russia, they had a decline.
Oh, okay.
And yeah, everything was still kicking on all cylinders. They told you, the management had been telling you for a while. It's just you had to believe them a little bit that content spend as a percentage of revenue would decline. And then if you modeled it out and you said it wouldn't do that, they would eventually be getting to something crazy, like eventually spending $100 billion on content, which then you did like an average of what Hollywood does, and you'd be like, Netflix would be all of Hollywood spending, which would be like ridiculous. But I'm saying like even further out into the future than where they are now. So obviously at some point you figured content spend as a percentage of revenue would start to tick down, and the you could think of content spend as a fixed cost, and then every incremental subscription you get on top of that is pure profit. So you're already spending it on the content. So now if you just get more and more and more subs and you increase prices and they stay, all that's pure profit.
So there we go, Dan. Like a little bit of geopolitical uncertainty and a narrative of like competition maybe. And voila.
Their cash flows are going up really fast.
Yeah, again, that to me, like I'm of the similar mindset of you would think that Netflix has a superior business model, and Spotify would at some point get on rocky ground or footing. Excuse me, but apparently not. Or if it does happen, it's yet to happen. So, credit to them.
I'm intrigued by it, but because I'm reading some people have articles saying that this could like 3x from here. I don't know.
Are they credible sources? Because if they're not, then we have our ceiling, so to speak.
But but then you've got like competition now. Like people are switching to Google. YouTube Premium has music product too. But they did cut down on their costs because they're not doing exclusive podcast deals so much anymore.
Yeah. So
that explains some of the free cash growth.
Yeah.
I don't know. Their member growth is in line with guidance. It's not like they're not accelerating growth. It's like in line with what people are expecting. I don't know. This would be like a waitlist stock. I'd have to figure out what I'd want to look for it. Certainly not. What is it? 100 PE right now.
I think that this one is a case where forward will be quite important. Yeah. So what forward and whose forward are we talking about? Legitimate argument.
But do people like the switching cost? You argue with this like it almost is a switching cost in the fact that you'll set up your preferred music app. You set it up, and you're familiar with the playlists, and you just don't want to learn another one. And you don't like. I use Amazon Music. Maybe I'm the only person, but like I know what all the playlists are called. I know where to find the podcasts. Like I don't want to do this again. It would have. I don't know. I don't know what kind of savings and money I'd need to switch. But
I only switch just because YouTube Premium. I enjoy it. And I'm like, okay, I have some free time right now. Let me just bother doing this. That's the only reason why. When I made the switch, I had free time.
Well, at least it's something that I haven't considered buying before.
Oh yeah. It's definitely not a bad company. It's funny, like I don't think in any of this we were like, oh, these are crap companies in this, live.
No.
Just companies that may not be for us necessarily.
So next we'll go over Fabio's favorite Reddit.
Hate Reddit.
They actually reported?
Yeah.
Yeah, they did.
It did do well actually.
Yeah.
It's about all the ones.
Yeah, because their deal was with Google, I think it was for AI.
I don't think that's going to scale though. Those AI, I think. Those deals will keep going. They'll get their data they need to train their AIs. Maybe they don't continue these.
Yeah, they're Google. They'll if it's data, they'll find it and get it and use it. Any interest in Snapchat, guys? Snap Inc.
Oh, for God's! It goes down every time it has earnings.
Yeah.
So I swear to God, every time it has earnings, I got to look at like the implied moves on it before it does, because every time it does earnings, it goes down, and I'm like, oh yeah, I should have known it was. Maybe I should have done something.
Yeah, it's funny that one almost always moves violently on that for earnings. Just always does.
I have to say, I found it. Fabio found another Dan that likes Boeings and turnaround industrial plays.
Yep,
I enjoy. You couldn't have made that up. I was like, Jesus.
It's another Dan.
Yeah,
I love it. Is this like a Dan thing? Apparently, I don't know.
It's a Dan thing.
Yeah, that was cool. Another reason to join Capital Mindset.
We get more. We have infinite Dans.
A supply of Dans.
There's you get all the Dans in finance to come on Capital mindset.
An abundance cornucopia.
I'm doing evaluations right now. Just did Dave.
What do you think?
Next week. I think actually, so when I got it, man, that was a steal. Because when
Did you buy the Liberation dip?
Not the perfect dip, but pretty darn close. So with Dave, when it got down to the Liberation Day dip, you were below like my most conservative scenario. They didn't have to, they barely had to grow at that price to actually satisfy a pretty strong rate of return. So
I should have bought it because I want to support them taking out payday lenders. Like
when they were at their
all
peak,
out of business.
Yeah, when they were at their peak, that was like just now earlier this year. They were approaching my second most aggressive scenario price, so it would have been not ideal. But there's one scenario that if they can hit growth of anywhere above 15% CAGR, I mean, it's going to look really cheap. It's because it's not very expensive right now on a trailing 12 months multiple. So it's basically trading as if it's not going to grow all too much. And it's not really like a bank per se. It really is more like a financial technology firm.
If I remember, they were getting in trouble with regulators about the tip, right?
Yeah.
And that's why they switched to the specific fee.
Which they got rid of. Yep.
Okay. I remember that part. Yeah, I talked to Garzi, but I was very interested and I just lost track of it. And afterwards I saw at 70. I was like, fuck.
Yeah.
I had like 6 companies I want. I only got to like the third one to buy. I'm happy with ANET though. Oh my God.
Oh yeah.
That's made my year so far. I'm very happy with that. But maybe I should have skipped Caterpillar for KLA. Oh well.
Yeah, Bacon, you also made ANET pretty large, no? 15% or so?
A little under, but like odds are assuming that things work out the way that it's envisioned, it probably will be beyond that.
Like I pulled index money, but I've not. I still believe the data center thesis is intact the whole year. It's not changed.
Mm-hmm.
Nothing has told us it's changed at all. So
yeah,
scared.
The thing for me was I didn't for whatever reason I didn't go on Dave, but I went with the other Garzi champion, and that one also has done well. I didn't like swing as hard as I should have in hindsight, but it's also doing a respectable job, and it's a nice percentage.
Well, I don't know about you guys, but the overnight is pretty bullish for an opening tomorrow. Looks like
we're back.
We're still not back, but it's coming back. And I think I told you guys, right? Or you guys might have seen my post on Twitter, but if not, so I think we have a couple near-term catalysts that could take us closer to retesting where we were before any sell-off. And that's because when you saw that major sell-off, it dipped. We had no corporate buybacks, none. All of that was a lot of retail with small accounts and hedge funds. A lot of funds selling. So all that liquidity left the system all of a sudden. And that's why you got a very violent drop. Like now that we take a step back, you guys realize like that was fairly historic. It wasn't the craziest ever in the history of the market, but relative to well, I think you'd have to go far back as like March of 2020, but that was we were shutting down everything. But it's similar to that in terms of the veracity of the sell-off and how quickly it happened. And so it was like the floor fell out from under the market. But now the recovery happened, and that was fueled largely by retail, but specifically rich retail. And a lot of funds are still off sides. They're still not invested. They have to meet a certain quota for performance. If they start to think the market has truly bottomed, then you might actually see FOMOing in from them. But now you're going to have corporate buybacks coming online, which was very unfortunate that they weren't able to buy back stock on April 2nd. Like a lot of the corporates we follow, they were not there, unable to legally. And so they just had to watch all that happen and then basically recover to where we were before. And then now they get to start buying back stock. So it is what it is. But that momentum could be pushed a little bit further. And then we still have the question of recession, but in just the near term, that momentum could be meaningful. And then we could actually retest a little bit higher. Then I don't know what happens after that. We get spooked. We go down a little bit. We don't. Who knows? But we do have a lot of cash sitting on the sidelines now. So that could very quickly go, oh, crap, I can't be offsides again because I'm always offsides because they're always offsides. And then that's why, which goes to the argument from some managers out there that say we've entered a new era in the modern era of investing where things happen way faster. Markets have become more efficient. So sell-offs happen faster.
Yes.
Recoveries happen faster.
No, I've been thinking about this with like social arb. It's like it happens. It's just faster than it used to be.
Yeah.
Like the opportunity's there and then it's gone. Yeah. Like it's just interesting how fast things recover now. And we're just used to buying the dip almost. Like it's programmed into people. Until one day it doesn't. It keeps dipping. But
I think as long as they're connected to earnings, actual earnings, the markets will be healthy. But there are pockets of extreme. So Tesla makes no sense. Palantir's, it makes no sense. Certain valuations in retail cult names, they don't make any sense. But broadly speaking, things are moving along with earnings. Like corporate profits are going up, stock prices are going up. Nothing crazy.
What did you think? Did you actually watch the billboard when Trump brought out that freaking tariff sign?
I watched it through you guys because I was on a beach in Aruba. So
oh, that's right. Yeah. Oh my god, dude! I'm just on my computer finishing work, and all of a sudden I see Lutnick hand this board to Trump, and I'm like, "What the fuck is that?" And then you start seeing like 150, 85, and you're like, 80. Like what the hell are these percentages? The market, when the board came out, you saw like the market was creeping up because I think everyone thought just like 10% was the expectation. As soon as he held the board, poof, it just cratered. It was amazing. I'm like, oh, wow. That's I kind of thought this would happen this year, just not like that, but that guy.
Yeah, I didn't tell you this, but on April 10th or 11th, I was getting asked in other servers, like, hey, should I like, is anyone buying, bonds? I'm looking for bonds. I don't want to buy equities. And I responded to that person. I was like, I can sell you mine. Because I wanted to do the opposite of what that person was thinking.
I know. It's like, how do you even look at bonds, right? Like, everyone, rates are going down. I'm like, are they? Like, every time someone says that to me, it goes up. Like,
yeah,
bonds is a tricky space. I just went straight to like cash thing, like cash secured assets. So
yeah, when I came back from vacation, I had the Mr. Cooper Capital.
Yeah,
that was a lot of firepower.
Yeah, that was like beautiful. And then I slaughtered AGMA, right? But I went into higher beta stuff. Like eventually was able to get Apollo and get the tax benefit from the initial run. And then Dave, for example, in the holding co, I blundered Arista because I had Arista and I sold it for what is now a meager profit if I had just held it, because I had it in the 60s and then I sold it in the mid 70s.
Oh
no.
Yeah, no, because I was still like, still kind of in the, I don't know if, where we are at, right? Any moment something could happen. And I'm like, I have no cash. I want to have some cash.
Okay.
And also had the shorts, right? So you know how I am with shorts, especially after Sonder, right? Yeah. I keep like all the short capital, and then I keep a buffer on top of that, so that if the shorts, start wriggling around, right, it doesn't affect anything with the rest of the account. So, yeah, all in all, like, that was kind of the reason why. But man, I should have chosen something else because I think that position I have it in my personal holding still, but the holding co now won't look as nice because it doesn't have Arista. And my sister's account,
She has it.
She has, yeah, her third largest position is Arista.
Very nice.
So
as soon as the market started tanking, I'm like, that was top of my wish list from and then as soon as Arista hit 80, I was like, all right, it's interesting. And then it kept going. I'm like, oh. And then I confirmed a few things with Jesse, and then I was like, oh, we're on here. I liquidated TSSI because I worry about small caps in this environment. So I've gotten rid of a lot of them. But
tactically, I quote unquote screwed up the entry on Arista. Like, my average cost base sits around like mid 70s. But
I bought it pre-market on the day it was like 64, 65.
Oh, very nice.
I was tracking it.
Yeah.
I didn't get the bot. I think at one point it was like $61 pre-market.
Yeah.
I did not get that, but
yeah, I like, odds are though, assuming it works, if we're talking like the difference of like low or mid 60s to lower mid 70s, assuming it plays out the way we think it is, I don't think anyone should cry.
I mean, as soon as I saw the Microsoft report, I'm like, Arista's going to be $100 stock. That's kind of what it told me. I'm like, unless some Trump crazy shit comes out, I suppose.
Well, longer term, you can just say Arista is going to be bigger than Cisco, which is already
really. I should double my position. I think about it. I'm like, I really should have like 500 shares of Arista. I can't make a case not to, but
it's crazy how one of our more expert people in that space was like, what are your thoughts on this company? Cisco killer. I'm like, whoa, okay. Right off the bat.
Okay. Yeah, home builders had gotten just clobbered. I thought it was kind of interesting. Oh man. Home builders, man, it's just tough this year. Like there's so many variables for the home building industry right now. The glut of apartment multifamily building. We're not really sure where rates are going anymore. I don't think everyone just assumed Trump's going to drop rates. It's like, I mean, it's not working yet. So I don't know. I don't know if home building is so compelling right now.
Did you see for military defense, by the way, that we're going to continue the war in Ukraine?
Oh, who said that one? Was it Rubio?
No, JD Vance.
What? Really?
Yeah, that was today. Yeah.
I've not had a chance to look at some of the military stuff. I skimmed through the committee notes about the budget. We still don't have a budget, so
yeah, we still don't.
Just have committee notes. I haven't done anything. It kind of just confirmed what I was already thinking. You want to be in shipbuilding and submarines, and I think there's going to be more precision missile spending, but RTX doesn't seem that. I mean, that would be RTX then. So I don't know. I'm hoping Northrop gets the Navy ship or the Navy plane deal because their B-21 program's dying right now. It's struggling.
Yeah. Like the one bit of military news that I saw, and someone like pinged you and myself, I think, was like some hardware will probably get discontinued, but see how it all shakes out.
Oh, this guy thinks Berkshire is going to buy a home builder.
It could. That would be their methodology. Like, give it enough time.
Yeah, maybe. I wanted them to buy half a Boeing. I don't get why Warren didn't buy half a Boeing when it was in like 140, 150s. Unless he's just not buying anything right now. Oh. Well, I think that's it. Hour and a half, Jesus. So looked over a few stocks. Yep. What are you buying? What are you selling?
Anything from you guys that you have in the works for people to look forward to?
I'm still working on this like master buy list sheet that's going to have like a massive repository of evaluations and stuff, but little by little, just taking a crack at a business, having conversation, like with Kale about AutoNation or Fuhat with Virtu, Garzi with Dave, and then little by little adding to that. So that's a interesting project I have working.
I want to look more at Dave, and I should just I look at it more.
Yeah, Garzi's done some pretty good work on that one as far as sharing it. Thank you for the $2 super chat, Fuhat. R.I.P. the Shark sleeping on Fabio.
Wait, I'm
Yeah.
sorry, Fuhat.
Yeah.
I didn't even know you did that. So I didn't even see it.
That's all good. One of us read it.
Rest in peace, Shark sleeping on Fabio.
Yeah.
Okay, yeah, there is a joint write up from Fuhat and Fabio. It's you can go find it in the write up section.
Yeah, assuming you're in Capital Mindset.
Stay tuned for content on my channel, the Dan Boomer Dungeon Stock channel.
I mean,
Fabio may or may not know about yet.
I just found out about it.
The Dan Boomer Stock Dungeon. I'm gonna put stuff in there soon.
I just noticed that that thing exists. I don't know why.
Are a lot of people on YouTube talking about United Health?
Some of them are, but I don't know like how serious they are. But
it's because it's been so pulverized. Everyone.
Yeah.
I don't know. I have a hard time thinking about buying this stock. Holy shit.
Yeah.
It went down even. Oh my God.
The numbers, Mason. What do they mean?
I struggle to look at this company because I just can't get over how terrible. Like doctors fucking hate this company. Their margins suck, and God, I don't know.
Well, you want another beaten down?
Cigna's tomorrow. I might look over Cigna.
You want another beaten down, ugly looking company?
What?
Dow Inc.
Oh, the chemical.
Yeah. Like, granted, it's quote unquote recovered from. It's going to be Dow Inc. stock because
so you can't just put Dow stock. It's like pain in the ass.
Yeah, like it's quote unquote recovered from its absolute low of 25-ish a share.
Wow.
But yeah. Bring it down some more, and then it'll be like price to book thereabouts, and maybe
that can't be right.
Well, it is a cyclical. It is so like floppy, crude caveman thought of like if cyclical trailing PE high, maybe buy.
Well, we got Exxon's tomorrow.
Mm-hmm.
Interesting to hear about oil.
Yeah.
Although the stock's not getting punished on low oil fuel prices, so
yeah, that is a curious one.
Yeah,
because news out of OPEC like some time ago was turning on the pumps.
Yeah,
reducing the price.
Yeah, I don't know. It's late. Otherwise, I'd look at OM8 or United Health, I guess. But all right.
I'm actually going to try to value that tonight.
United Health?
Yeah.
Best of luck.
I've been already doing, well, the past other nights, I've been looking through all the documentation. So tonight I'm going to tackle that. We'll see how I do. I'll let you know.
Thanks for watching. And go subscribe to Capital Mindset. You can come make jokes and we'll harass you if you come in, and maybe you learn something or not.
You'll be harassed spiritually and sexually.
I do not stand by any of this.
No, Bacon's a particularly
oh dear God, I hate this
problematic character.
This is slander.
I usually have to talk to him, to the side, and I say, hey, like that person is
because this is verbal. This is slander. If this was written or text, be libel.
Yeah.
They're like, I'm paying for this. Yes, you are. Oh my god. All right. Thanks for watching and stay safe. I don't know.